if you can see my screen, I believe everyone can see my screen. If you can see my screen, can I see a raise of hand? If you can see my screen, can I see a raise of hand? All right, great. Thank you very much. Thank you. I so much appreciate that. Thank you so much. Now, let's get started. Now, tonight we are going to be talking about cryptocurrency. And as we all know, cryptocurrency is the future of money, and it's just where the world is driven to. Now, the first thing you have to understand is that Bitcoin itself is where it all started, and the blockchain technology is now disrupting the financial space. So today we are going to be talking about the basis of cryptocurrency trading, and we are going to be using one of the hundreds of exchanges in the world, which is Binance. So we are going to be looking at the Binance platform, and I'm going to be intercepting the class from the PowerPoint to the Binance interface and showing you what it is, what to do, how to trade, how to buy Bitcoin, and all of that. So let's get started. Like I said earlier, ensure you have your pen and your paper, pen things down, write down your questions so that when it's time for Q&A, you can as well ask your question properly. So my name is Kunes on Paradise. I'm the CEO of Remy Trade Academy. I base in Port Harcourt, Nigeria. My personal mission is to accelerate Africa transition into a sustainable developed economy by leveraging on the innovation in the crypto space. And I have a good background in biochemistry, forex. I trade forex and stock trading, and I'm also a cryptopreneur. So I am an enthusiast cryptopreneur, educationist, driving the adoption of blockchain and other cryptocurrency assets across Africa. Now, at the end of this event, like I said earlier, you'll be able to, know what Bitcoin is, what cryptocurrencies are, how blockchain works, and several other use cases of blockchain, and how to buy and sell cryptocurrencies with your local currency. In fact, that's the most important thing. How you can use your Naira to, buy cryptocurrencies. How you can use your Naira to buy cryptocurrencies. Very, very important. I will show you how you can deposit your Naira and use it to, purchase some cryptos. So let's proceed. So this is Binance. Like I said earlier, this Binance, and Binance is the world leading blockchain and cryptocurrency infrastructure provider with a financial product that includes the largest, digital assets exchange by volume. Now, it takes Binance only about 5 months to become the world's most largest exchange by volume, and it is trusted by millions of people across the world. And Binance have dedicated its platform to increase the freedom of money for users, and the features are so much unmatched to the portfolio of cryptocurrency products and its related offerings. So Binance is the world leading cryptocurrency exchange. Before Binance came on board, there were other exchanges, like you talk about Bitfinex, you talk about Bitrex, GDAX, Coinbase, and all that. But when Binance came on board, it actually overtook all those exchanges in a matter of 5 months. So you can see that the exchange itself have a good leadership driven focus. They are very focused, and when you go to their platform, you will see that these people are actually trying. So we are going to be using Binance as our point of discussion and where you can actually trade. Now, it's very important for you to know that the link I drop in the group, that's in the WhatsApp group, ensure you pass through that link and do your Binance registration. Is very important. For you to trade, pass through the link and do your registration. And if you pass through the link, you have 20% commission off your trading fee. Because if you're trading on Binance, you have to, pay some fee. So for you to pass through my link, you have 20% commission given to you when you pass through my link. So it's very important. It's in the group WhatsApp, and I will also drop it in the description for those of you that will watch it, on YouTube. You check in the description below, and you also see the link as well. So this is Binance, and if you can see, this is how it looks like. This is my account. This is my Binance account, and this is how the interface looks like on desktop. That's if you're using the PC, this is what you will see. Most time it will be very, complicated for beginners to, see something like this, and, for you to understand what it's actually talking about. So you need someone to explain and, dissect what it is and what action you should take at what point and all that. So that is what the class is all about. So this is the Binance interface. Let's proceed. Let's proceed. I hope everyone can hear me. I believe you guys can hear me.
Please record, please, sir.
Yeah, the video is recorded.
Yeah, we can hear you.
The video is recorded. Don't worry about that. The video is recorded. After now, you can check on my YouTube channel, and then you watch the video over and over again. Thank you so much. So now, when we talk about trading, we all know that if you go to the market, either a local shop or anywhere in the world, or in your local market, you want to buy something, there must be an exchange. You have to exchange your naira for that product or for that goods you want to buy. That is a trade. You've actually performed a trade. So when you exchange your old PC for a new, game console, you have actually traded. So we could say that when you want to take a trade, you actually pay for something, or somebody is paying you for something. So there is an exchange that is taking place. So when such thing occur, we say that a trade have actually occurred, and that process is called trading. Now, the same principle also exists in the financial markets, and you trade financial assets like stocks. You trade Apple stocks, Google stocks, Facebook stocks, so many other stocks like Amazon stocks. We have bonds as well, forex space like currencies, options, and cryptocurrency. These are, financial markets. So don't worry much. Before the end of the training, you will know how to trade cryptocurrency. But for the purpose of this training, we won't be looking at stock trading, bonds, and forex pairs and all that. We'll be focusing on cryptocurrency, which is the new dimension where money is focusing to, because it's actually disrupting the financial space. Now let's get ourselves acquainted with Binance and what it is. Let's get ourselves acquainted with Binance and what it is. Now, understanding Binance, the first thing we're talking about is the market space. The market space. Then we'll look at the order box, and then we'll look at charts. So let me go to my account. Like I said earlier, I'll be going through the presentation, and then I'll go to the live charts. That's the live account, Binance Exchange, to explain what it is for you, so you understand very, very well. Write down your question and ensure you do that. Now, the first thing is the chart. Now, this is the chart. As you can see, Bitcoin have rose in the past, let's say 1 month. Bitcoin have skyrocketed to the upside right from when it was. This point is $10,600, and it has reached $9,400 thereabout, and now is going down. This is just a retracement. Okay, now this is your chart. Now what this chart does is it gives you a historical data of what Bitcoin has done before and what it's doing right now. So with this data, you can use it to analyze and tell what Bitcoin will do next. So with the help of this chart, you can predict the price of Bitcoin. That is what this chart does. And anybody that looks at charts to take his decision, we say that person is a chartist, or that person focuses on technical analysis. We'll come to that as we proceed in the in the training. So this is your chart, and like I said earlier, it's used to predict the price of a financial asset or financial instrument, in this case Bitcoin. Now the next thing we're looking at is our market pairs. Now our market pair, where can you find your market pair when you come to this platform? You go to this very area, you see BTC, USDT. Now USDT is a stable coin, just like US dollar, okay? So it's equivalent to US dollar, and they are all stable coin. You can also see BUSD, you can see TUSD, all those ones are stable currencies or stable coin, okay? So these are market pairs. All right, so we have BNB. How do we know that this is a BNB pair? If you look at it, everything here is BNB. Everything on the right is BNB. Why those ones here change? Okay, so this is called BNB markets. You have BTC market as well. If you look at everything on the right is BTC. Why this guy change? And we have altcoin markets. Altcoins. Now, what are altcoins? Altcoins are any other coin aside BTC. Any other coin aside BTC is called altcoins. Why are they called altcoins? Because they are alternative coins. They are alternative coin because BTC is the first cryptocurrency that was ever created. So take note of that. So you can choose any pair here, and we also have fiat market. So this is USDT. We have Nigerian Naira somewhere here. We have Nigerian Naira. Can find our Nigerian Naira here. Let me search for it as a pair, USDT NGN. So you see Nigerian Naira here as a pair as well. Now we have what we call the zone, where you have the innovative zone, DeFi, POS, and all that. So this is what we call market pair. Don't forget market pair. Now when you look at it, you discover that they occur in pairs. They occur in pairs. So if you go to BTC market and you see this guy, you see AVE/BTC. They are all in pairs. Now you must note that in the financial space, currencies occur in pairs. They must occur in pairs. That's the only way you can exchange one for another. Okay, so if they don't occur in pairs, you cannot actually exchange one for another. Let's say, for example, you have BTC USDT. That means if you have BTC, you can convert your BTC to USDT. If you have USDT, you can convert your USDT to BTC. Okay, so what happens here is just series of exchanges, that is conversion from one cryptocurrency to another. So that is market pair. Very important. So take note of that. We have the box, which we call the order box or the market order box. Now, the market order box or the order box is what you are seeing here. That's the order box. Now, this order box show you buy and sell. This is buy option. Let's say, for example, now my chart is on BTC USDT and my order box is here. It means if I place this buy, it means I want to buy Bitcoin. That's what it means. I want to buy Bitcoin. If I place on sell, it means I want to sell my Bitcoin to USDT. If I place on buy, it means I want to use my USDT to buy Bitcoin. That's how it works. So this is your order box. Very important. Now we have what we call the order book. Now what is the order book? The order book is when you place an order, your order will go to the order book. When you place an order, your order will go to the order book and it will be merged together. So let's say trader A placed an order to buy Bitcoin at $10,000, for example, and trader B placed another order to buy Bitcoin at $10,500. Their orders will be filled in the order book. Now, if it is a sell, you will see it at the red option. If it is a buy, you see it on the blue option. I don't know whether people are getting it. If it's a sell, that's if the person placed an order to sell Bitcoin, it will be here, the red side. And if the person placed an order to buy Bitcoin, it will be on the buy side. That is the green side, okay? So this is the order box. Now, when the price is being reached, That is, it's just like when an agreement is being reached when you go to the local market to price for, any items. That is when an exchange actually take place. Okay, so when the price is reached between a buyer and a seller, it now match each other to give you what you call the trades. So you have the trade here. You see blue, you see green and red. You see green and red. It means there is a matching going on in the other book. Very important. Take notes, because the other book is very important. Now, if you go advanced, you can use only the other book to predict what the price of Bitcoin will be, because the number of people buy and the number of people selling can actually determine the movement of price using our common knowledge of demand and supply when it comes to economics and the financial space. So it's very important. So I've actually explained charts, the market pair, markets. We have the box, we have also the other book. So take note of that. Is very, very important, and also keep your question. Now, what is a market and a market pair? Now, a market is very specific, and it's where buyers and sellers comes together to trade a certain asset. So when we're talking about a market pair, we are looking at, if you want to buy something, what are you paying with? And if you are selling something, what are you getting? So in this case of Bitcoin, BTC USD is a market. Why? Because if you are selling Bitcoin here, you are actually getting, USDT. And if you are buying USDT, what you will have in return is Bitcoin. So it's a market. You sell your Bitcoin to USDT, you use USDT to buy Bitcoin. So it's a market. So one person must be a buyer and the other person must be a seller. So this is where the term of agreement is reached, where you exchange Bitcoin to USDT in this particular instance. So take note of that. It's very important. Now, let's talk about market pair. Very important, so that you understand what I mean by market pair and market. Now, let's say, for example, you have BTC ZAR. This is South African Rand. Same thing with BTC NGN, BTC Nigerian Naira. We have the BTC CAS and then BTC USDT. They are numerous when it comes to market pair. So if you have BTC ZAR as a pair, then it means that the market for buying and selling Bitcoin in rands, that means you can use rand to buy Bitcoin and you can sell your Bitcoin to rand. That's what it means. So the market pair BTC ZAR indicate that if you want to buy Bitcoin, you have to pay with rand. Just the same thing that occur in our local market that we do every day. And if you want to sell Bitcoin, you will be paid in rands. That just is very simple. When you go to your grocery stores and you want to buy any groceries, you have to exchange a money that's a fiat for that particular groceries, and you'll be given the grocery and you go home with the grocery. So that is exactly what happened in the cryptocurrency market. The same thing with Ether NGN. Users buy Ethereum with Naira, and you can sell Ethereum and be paid in Naira as well. So you can actually as well change this. If you go to market, and I can change this chart to BTC ADA, which is BTC Cardano. This is Cardano chart, and what this means is I can use Cardano to buy Bitcoin, and I can as well use Bitcoin to buy Cardano. Okay, they must be in pair. That's why I said that in the financial space, currencies are actually traded in pairs so that you can exchange them from one to another. So very important. Take note of that. Okay, now let's move further. Now we have what we call types of orders in the financial space. Listening attentively is very important for you to listen and add to your knowledge so that you can teach others. Remember, this training is absolutely free, and we are here tomorrow by 7 p.m. to conclude the section. Don't miss out. Very important. Now we have types of orders in the cryptocurrency space and also in
other financial market like forex, stocks, and bond trading. Limit order. Now, a limit order is an order you place to buy or sell an asset at a specific price or a better price. Listen attentively. It's an order you place to buy a particular asset at a specific price. That means you are the one to specify the price you want to buy or sell your assets. Okay, so this price is called the limit price. That's the price you choose. It's called the limit price. And the limit buy, that's the limit buy order, is the order that will execute at the limit price or lower. That means if you place a limit buy, it will execute at that price or lower. What does that mean? It means that if you want to, let's say you want to buy something in the market, you will be happy if you buy at that price you negotiated or at a lower price, because it's already at your advantage if it is lower, isn't it? So the same thing in the case of if you want to sell. That's why I said here that while limit sell order will execute at a limit price or higher. So let's say you take something to the market, you want to sell it, and then you've already fixed your price, but you get something higher than your price. It's good. It's good you get something higher than your price. It's something, good. Everybody wants it. Everybody wants to sell at a higher price. So when you place a limit sell order, it will, execute at that price or a price higher. Okay. So when you are setting a limit order, you are basically specifying the price you want to buy, but not at a worse price. Now, what is market order? Market order is a price that you want to, buy a currency or an asset at the market price. Now, you don't have to specify because they will give you at the best market price, and it's the fastest kind of order you can see in the financial markets. So you are telling the exchange, give me at the better price, which is right now. So we also call this the instant execution. So market order equal to instant execution. Now we have another one called stop loss order. Now this is used to limit a trader's loss when it comes to trading. Now remember, trading is not only juicy. You can also experience losses, but you can use the stop loss order to limit your losses in case the market is going against you. So the purpose of the stop loss order is mainly to limit losses. So every trader needs an invalidation point where if price cross a particular point, you can say, okay, at this price, my idea is wrong. And that means I want to exit the market. So let's say, for example, you buy Bitcoin at $10,500. And you say, okay, if Bitcoin cross below 10,000, I am not interested again. Please convert my Bitcoin to USDT, which is a stable coin. I don't want to lose the value of my Bitcoin anymore. Okay, so that 10,000 is your invalidation point. Remember, you buy it at $10,500. Okay, so that if it drops to 10,000, it will automatically, sell your Bitcoin back to, USDT, which is a stable coin, so that you don't lose anymore. So the stop loss order is used to limit a trader's loss. Now let's look at the practical section of it so that you understand. Okay, so now you have this limit order and market order, and stop limit, which is the stop loss order. Now the market order is you want to buy Bitcoin. Let me change this chart, this market, to BTC USDT, USDT BTC. Okay, so BTC US. All right. Okay, so now if I want to buy Bitcoin, I'm using market order. I'm saying I want to buy Bitcoin now. So I can just put the amount of Bitcoin I want to buy here. You can say 1 Bitcoin, which is about current price of Bitcoin is 16,800, and you click buy. Once you click buy, you've bought Bitcoin. It's as simple as that. I think I don't have any Bitcoin here. I just have some USDT, which is about 223 USDT, which is about $223. Now, that is how you buy. Once you click here, you've bought Bitcoin. Now, when it comes to limit order, now remember this price, when you buy, you are being given at the market price, which is this price. This is the market price. This price you are seeing here is the market price. So if you click buy here, you'll be given at this price here. Now, if you are using a limit order, let's say you believe Bitcoin will come to this price, which is 16,577. 16,577. So I can go here and click 16,577. I'm saying at this price is where I want to buy, and I want to buy 0.0007 Bitcoin. So if I place this order, this is about 11 USDT. If I place this order, my order will be executed. Now it will go to the order box as a buy order. So if I click on it, you see my order has been created. Now if I go down, if I bring it down, you see, if you look at here, you see limits, you see buy. It's not filled yet. Why? Because price have not come to that area. If you look at my chart here, you will see that there is a green line. This green line is where my order is. So when price will move to this green line, that is when this order will be executed. If price does not come to this point, it will never be executed and it will remain active until I come and cancel it. It's as simple as that. So take note. So limit order, you are placing the trade, at your own price. You specify it. I want to buy at this price. The same thing when you want to place a limit sell. The same thing, if you want to sell Bitcoin, you can as well, if you believe Bitcoin is going to hit $20,000, you can, set your sell limit at $20,000 and go to anywhere you want to go. When price comes to that $20,000, it will automatically execute for you and sell your Bitcoin back to USDT. That is how, limit order works. So since price have not come to this area, I can come here and cancel my order. Once I cancel my order, you see my order has been, cancelled and my USDT is back to my account. So it's as simple as that. That is how you place limit order. Now the last one is stop limit, that is stop loss. Now what is it used for? Like I said earlier, it's used to limit a trader's loss on a particular position. How does it work? Now let's say, for example, you've analyzed this chart and you believe at this point, if Bitcoin crosses this point, it's still going to go down, and you have Bitcoin already. You believe that if Bitcoin goes down from this point, it's going to go down, and you want to buy Bitcoin at this price. Listen attentively, because some persons don't understand how to use stop limit order. I want to explain here. Although there's a video in my channel that explains only types of orders, I will drop the link in the description so that you see that out. Okay. Now, let's say you want to buy Bitcoin at this price, which is $16,090. Now, this is the point you want to buy Bitcoin. You've already placed this order together with this at the same time. So, what happened is, at this price is the limit buy. Now, when price comes to this point, it will execute a buy order for you. So you now buy Bitcoin. Now at this point, you are expecting the price to go up because this is where you buy Bitcoin. Now, should in case price comes down and hit this, you are saying at this price, which is 15,616, the exchange should sell for you, because at this price you believe if it crosses this point, Bitcoin is going to go down and is going to be a loss for you. So you don't want to lose anymore. So that if Bitcoin goes down below this point, you are going to lose the difference between your limits and your stop. Okay, so you now use this price, which is 16,007 as your limit, while you use the second line here, which is 15,588 as your stop, so that when price comes to this point, it will stop you out. Now, what happened there is this. When price comes to this point, the first line here, which is 16,062, you buy Bitcoin. you are expecting price to go up immediately you buy. Now, if peradventure price does not go up and it hits here, the exchange should sell BTC into USDT for you, because you believe from your analysis that at this point, if Bitcoin goes down below this point, it's still going to go down, which will result to series of losses. Okay, so you will now, sell your Bitcoin at this price. So that is how you use your, stop limit order. Is very, very, simple. So let's proceed further now. Technical versus fundamental analysis. Now, technical analysis, you are using, historical price pattern trends and all that to predict what the market will do next. And these include charts. You use indicators, technical indicators, and trend lines. So when you do all those things, we say you are a technical analyst. Now, fundamental analysis, you are looking at the factors that, affect the underlying asset. For example, Bitcoin. There are factors that appraise the price of Bitcoin, like BTC hash rates, the number of minings, and all that. They all affect, Bitcoin price. Now, for BTC, it also includes the number of addresses and also hash rate. I've talked about that, and trading volumes. These are fundamental analysis. So if you are looking at factors that affect a particular cryptocurrency asset, you look at addresses, hash rates, trading volumes. These are fundamental analysis. But when you are using historical price action, that is what price have done before from your chart, as I shown you in the BTC USDT chart, or you're using indicator trend lines, it means you are doing technical analysis. In this section, we'll be focusing on technical analysis in the next slide. So let's proceed. Now, what is technical analysis? Technical analysis mainly uses these three tools. Number one, we have the candlestick charts. We have the trend lines and support, resistance, and all that. And we also have technical indicators. Now, I'll be showing you how to use these three technical indicators to actually use it to, trade the financial market. In this case, cryptocurrency market. So let's go further. What is candlestick charts? Now, a candlestick chart is made up of four data. So we have the high, low, open, close, and this is referred to the OHLC values. Is very important. And the opening and the close are the first and the last recorded price for the given time frame. I will show you practically, don't worry about that. Then why the low and the high are the highest and the lowest recorded prices respectively. Now, the candlestick chart, as you are seeing here, was discovered by the Japanese rice trader in the 17th century, which was later modified in the 20th century by Charles Dow. It's very important for you to give kudos to this guy. He did a nice and wonderful job to modify the candlestick to what we are using now, because before traders were using line charts, which does not give enough information to analyze the chart and know what the price is doing at that moment. So candlestick chart analysis is one of the most common way to predict the price of Bitcoin market or cryptocurrency markets using technical analysis. So let me show you what that means. Now, this is candlestick charts. This is candlestick charts. As you can see, let me broaden a little bit so that you guys can see it clearly. Now, this is a candlestick chart. I want to explain a lot of things. Okay, now let me put it on a wider screen mode so that you see it clearly. Okay, great. Now, this is a candlestick chart. Now, the green ones are bullish candles. Take note, the green ones are bullish candle, while the red ones are bearish candle. Very important. Now, remember, candlestick differs depending on the time frame. So I can put it on W1. This is D1. D1 means 1 day chart, which means each of these candle is forming 1 day. Like this one forming now is formed today, okay, which is 27th of November 2020. And if I put it on 1 week, it means each of these candle that you are seeing right now forms in 1 week time. At the expiration of 1 week, another candle will now form. The same thing happens when you go to 1 minute, 15 minutes, and all that, including 1 hour and all that. So what that means is this: if I put it on 1 day chart, If I put it on 1 day chart, it means each of these candles is forming 1 day. And then if you look at it very well, like I said earlier, this is a green candle, which is a bullish candle. The red ones are bearish candle. Now, what happened in this financial space is just a fight between the bulls and the bears. I believe you know those two animals. So they use the two animals to, describe what is happening between buyers and sellers in the financial space. Now, if you look at the candlestick very well, you see this high from here where you see the shadow to this point is called the body of the candle. The same thing happens to these red ones. From here to this point is called the body of the candle. Why this small line on top is called the tail. You can call it the tail, you can only call it the wick or the shadow. Three things: tail, shadow, or wick is the same thing. Okay. Now, this is the lowest price. This is lowest price, sorry, where the price comes to before closing at this point. This is the highest price. This is the opening price when it comes to bearish candle. I repeat again. If it's a bearish candle, this is the opening price. This is the closing price. This is the lowest price. This is the highest price for this candle. When it comes to a bullish candle, we have the opening price here. We have the closing price here. We have the lowest price here and the highest price here. So you must understand these four things that explain the candlestick infrastructure, so that you get, what it is when using the candlestick chart. Very important. Now, trend lines. Now, trend lines are used to predict, patterns or the behavior of a particular, market. So I can use that to tell where price will move to and how you will take your decision when price approach your trend line. So trend lines are widely used by both technical and fundamental traders, and they are lines that connect certain points, that is data on your chart, and this data is price. So some traders may draw their trend line, differently. Some may use oscillator like indicators, and some may use also momentum indicators. But the main idea behind trend line is that it visualizes certain aspects of price action. And as a trader, you must actually, know how to draw your trend line perfectly. So if you can see my screen, this pattern, this particular one is a good way to draw trend line. This one is the wrong way to draw trend line, because if you draw trend line like this, it means you are wrong. If you draw it like this, you are correct. If you can see it here, you see that it's from one point to another without touching or crossing the candle. If you look at this point, it actually crosses here. So this line is supposed to be shifted to this end so that it can give a perfect trend line. Now let me go to my screen to explain. Now if you look at this very well, the first thing you have to do before you can trade any markets is to understand the structure of the market. Now we're talking about market structure. We are looking at, is the market trending up? Is it going down? Is it trending sideways? Although we are not, going to that today. That should be for advanced students, those that want to take it more further. Okay. Now, if you look at this, you can actually draw your trend line. How do you draw your trend line? Like I said earlier, you go here, pick your trend line, and you draw it out. That's the best way for you to draw your trend line. Okay, you draw it from one point to the other, to this other point. If you can see market touch here once, from this point 1, 2, 3, 4. So this is a valid trend line. Now for a trend line to be valid, it must touch at least 2 points. The third point is a confirmation for you. Now, why are we using trend line? It means that since price have been touching this trend line and be bouncing up, it means if this price should crash down to this trend line, it will bounce back up because price have been obeying this trend line in the past. That's what it means. Very, very simple. If you go to the H4 chart, which is one of my lovely chart, I love the H4 very well because it gives me what I want. Now you can as well draw a trend line on the H4 chart. You can see a pretty good trend line here. Look at it now. You see that price is obeying this trend line. You see it touched from this point, the second point, third point, and where price is right now, rejecting, is the point where this trend line was drawn. That I draw the trend line right now. That means the trend line is very valid. It means that price will reject, as it's rejecting here right now, go up and may go up like that, or come back and retest it again. So trend line is only valid when 2 points is met, connect it like I did here, and then watch when price approach that particular line again, and then you know what to do. That's very important. So that's trend line. I believe you know how to draw trend line from this particular example. Take note of that. So that is how to draw trend line. Now, the other thing we're talking about is resistance and support level. Now, this is the most widely discussed concept. And as a trader or as a beginner trader, you must understand what resistance and support level is all about. It's very important. So resistance means a level where price find a ceiling, that is, it find resistance, the area where price is being resisted. So at that level area, there are a lot of suppliers, that is sellers there, that will push the market right down. Now support is where price find a significant demand and price start rising. So you consider support as a floor where buyers push the market to the upside, or price to the upside. So as you can see here, this line is a resistance area, while here is a support area. So if I go to my chart here, you can see, let me go to the D1. All right, so we can draw a lot of resistance line here. If you look at this, this is a support line where price find some sort of support before it actually goes up. Then if you look at here, we have resistance here. Price was resisted here, and then after it breaks and move up, retest and go up. So resistance is where price find ceiling before it comes back down, and support is where it find floor that raises the market up or price up. So resistance and support level is what you should not take lightly. Put it into consideration. Now the next one is we'll be looking at few technical indicators. Few technical indicators. Remember to set down your question, because anyone from now will be entering Q&A, so that you ask your question properly. So the first indicator we're talking about here is relative strength index, which is RSI. Now the RSI is an oscillator that gives momentum. It's an oscillator that predicts the momentum of the market, and it actually uses oversold and overbought condition in the market. So let me use my chart to show you RSI. So you go here, technical indicator, and you find relative RSI, relative strength index. So once I do that, you see it is on my chart right now. Now the most thing you have to understand when using this is that it have 2 points. That's very important. We have the oversold point and the overbought point. Now when this line cross this level to this point, that is from 70 to 100, is called overbought, while from 30 here to 0 is oversold. Now what happens when market gets to overbought is the market comes down. If you look at it very well, when market was at overbought here, you see the chart was dangling around here and later come down before it consolidates and then move up. Now when market comes to oversold, let me check an area where market comes to oversold. Okay, if you see here, if you look at here very well, market come to oversold condition. Look at what the market was doing here. After the oversold, it means that sellers has been selling for a long time, and there is no much sellers again in the market. So the market is going to go to the upside. That is, buyers will now take control. That's what it means. So at this point, market starts going up, and if you look at the chart, it starts to go up. So the best time to buy is when the market is at oversold, and it should show you a sign of moving out of the oversold condition. Take note, when you should buy is when market is coming out of oversold condition. So you are triggering your trade around this level, that this area. The same thing when it comes to buy. Okay, so at this point, market was already overbought. So it means that people were buying for a long time and sellers will take control. So when market is going down, as it's going down, you look at your candlestick, market start going down. This is the right time to actually, place your sell order for you to sell the market. So that's RSI. In the summary, RSI predicts the strength of the market using oversold and overbought condition. I said at overbought condition, you sell, while at oversold condition, you buy the market. So that's very important. Now, the next thing we're looking at is moving averages. Now, the moving average is a smoother price action that make it easy to spot market trend. So you use the moving average to predict the market trend. That means if you don't want to use your trend line, you can as well use the moving average as your tool to predict the trend of the market. That means either the market is going down or up. Remember, you can't use the moving average if the market is moving sideways. You can't use it. So they lack predictive qualities. In other words, they are lagging indicators. What does that mean? It means that you cannot actually use the moving average to predict, the price of the market. You can only use it to, support your trade in the case of defining the type of market, that is it moving upward or downward? So moving average. So the moving average will just be placed on our chart. You can place as multiple moving average as you like. So the main purpose of the moving average is that when it's on a downtrend, like in this case, it serves as a resistance. Like this is a resistance area, resistance area, resistance area. So when you see the moving average cross like this, in the case of the market going down, it serves as a resistance. In the case of the market going up, it serves as a support to the market. If you look at here, the market was going up straight and it was in line with the moving average. Okay, so it tells you the trend of the market. Very, very important. Don't forget it. So the moving average is used to predict the market as well. So take note of that. But you can't actually use it to tell when to buy now and when to sell now in the case of using, the RSI. The next indicator is the Bollinger Band. Now, the Bollinger Band was discovered by a man called John Bollinger in the year, 1980s. And it uses a simple moving average, which is the middle one here is called the simple moving average. And the upper line here is called the upper band, while the lower band here is called the lower band. That's the lower line, lower band, upper line, upper band. The middle line, moving average, is very simple. Now, the middle line, which is the moving average, is a standard deviation from these two lines. That is the upper band and the lower band. That in this case, you can as well, change your settings from default and put it like 2 standard deviation from the middle band to the upper band. 2 standard deviation from the middle band to the lower band. Anyone you like, you can as well, manipulate your, your moving average. Sorry, your Bollinger Band is very important. Now, you can leave it at default setting. It's advisable as a beginner trader, just leave your Bollinger Band at default setting. Leave it at default setting and, use it to trade. So the most important thing you have to note about the Bollinger Band is that it's a volatility indicator. It shows you where volatility increases and where volatility decreases. Now, the place where the Bollinger Band dilates, that is move apart from each other, is where there is high volatility. And the place where it squeezes, that is comes together, like in this case, it's where there is low volatility or decrease in volatility. Now, if I go to my chart and let me delete, okay, let me delete some of these guys as well. All right. So I can go to indicator. I bring the Bollinger Band. So it's already on my chart. So you see the place where you have low volatility, you see the band come close together in this point. This particular point is what we call the Bollinger Quiz in the market. Now, what you are looking at to enter your trade here is a breakout out of this point. Once the market breaks out of this point, it's a good time to enter. Now, if you enter immediately after the breakout, at this level, if you enter immediately after the breakout, it means you are aggressive. Now, in trading, we have two types of traders: aggressive traders and conservative traders. Aggressive traders enter immediately after the breakout, while conservative trader will wait for the market to retest this particular level. That's this line that I just draw right now, before they will now enter on the move to the upside. That is conservative trading. Either way, it's not bad. Either way, it's not bad, because if you are aggressive, the market can just shoot up without touching this level again. That is without a retest. Now, if you're also aggressive, the disadvantage is that it can just give you a false breakout and go back down. Now, if you are conservative, the advantage is when it retests, you are very sure that the market is going to go up. The disadvantage is it can just go up without retesting. So either way is good. But the most important thing you have to note about the Bollinger Band is that it's a volatility indicator. As you can see here, when price starts moving up drastically, you see the Bollinger Band dilates from each other, and the candlestick was being formed in the upper band. Now, if I go back and you also see when the market was going down, you see market going down and the Bollinger Band dilates from each other. That is, expand from each other. So you're looking to enter the market. If you're using the Bollinger Quiz strategy, you enter the market after the breakout of the quiz. Now, one of the important things you have to note is that in the case of a downtrend, the upper band serves as a resistance level. In the case of a downtrend, the upper band, which is this line, serves as resistance level. While in the case of an uptrend, the lower band, which is this band now, serves as support level. It supports the market. Now, in the case of sporadic, upward trend, the middle band, which is this one, the middle line here, serves as support for the market to go up. Now, the same thing in the case of a sporadic move to the downside, the middle band serves as resistance. Take note of that, it's very important. Now, the way I'm just trying to go over everything, in our advanced course, you actually get everything step by step in details. Now, the next thing we're looking at is scalping. Now, who is a scalper? A scalper is someone that enters in and out of a position quickly. So they're looking to take, snap position, enter in and out of a position within minutes and seconds, using or taking advantage of price fluctuation. So in case you're using technical analysis and you're trying to predict price movement, and then you want to exploit the bid and the ask, price by taking profit from it, then you are a scalper. You do that in short time. So the main thing you have to understand about scalping is that you are using the smaller time frame. Because on the smaller time frame, let's say for example 5 minutes, you will see how the charts will move faster. Okay, when you are using something like 1 day, it will be very dull. Okay, so if you're a scalper, you're looking at 1 minute chart, 5 minute chart, and 15 minutes chart. So you're looking to enter in and out of the position and take advantage of price fluctuations so that you can profit out of that price fluctuations. So that is that for scalping. It is also profitable. So if you are scalping, you are a scalper. That is what it means. And it is also profitable when you use that trading methods. Another trading method is called day trading. Now, day trading means that you are actually, staying on your screen of your computer or your smartphone or your desktop, looking at the, charts throughout the day. Those guys you see on Wall Street, that are CNN, you see them, with a big, iPad, or see most of them on system. They are actually day traders. They are predicting the price of the market, take advantage of price fluctuation during the day, and they will be seated there all through the day. Now, The day trading strategy involves in exiting and entering the market within, the same day is called day trading. And if you are day trading, you are a day trader. If you are day trading, you are a day trader. Now, cryptocurrency market, as you probably notice, is it's open all around the clock. So that means there is no time for you to say, okay, this time the market will not be open. Just like the forex market that closed today, which is Friday, and other stock, exchanges like New York Stock Exchange, London Stock Exchange that close during weekend days. The cryptocurrency market is different. It's 24 hours. That means you can trade anytime you like, even in the night. So in day trading, you probably, rely on technical analysis to determine the price of an asset, and you profit within that short time. But the most important thing is that you are staying on your computer all through the day, predicting the price of the market, taking advantage of price fluctuation. So for day trading, you are looking at 15-minute charts, 30-minute chart, 1-hour chart to predict the price of the market, so that you can take advantage of price fluctuation. As you can see, the price of Bitcoin today is like this. So people that actually know how to trade on margin will have made a little profit. Okay, from this point to this point is massive profit if you are using margin trading. That's if you short this market from here to this point, you should be in massive money. That is what? Margin trading. This is spot. So let's proceed. Now the next one we'll be looking at is swing trading. Now swing trading works with larger time frame horizons. It's very simple for you to define a swing trader and a day trader. Now their positions are usually held over a couple of days, sometimes weeks and months. They don't bother about price fluctuations, and most people that look at or that do this type of trading is investors. They don't bother much about fluctuation in prices. Okay, they've actually viewed the long term and said, okay, I am going to leave this trade for a very long time. So they allow the trade to run for a long time. So they don't bother about the fluctuation of prices that occur. Now, most time they use fundamental analysis of the underlying assets to determine where the trade will go next. So they don't stress themselves, they don't stay on the computer throughout the day, and they don't do a lot of screen work. So most time they use the 4 hours charts and the 1 day charts. That's what swing traders use. Now, why are they called swing traders? Is because they take the swings of the market. Now, where are swing points? These are swing points. This is swing points. Market goes up, come down, it forms a swing, it goes up again, come down, it forms a swing, it goes up again, come down, a swing, it goes up again. These are swing points. So this is where they enter their trades. So market move from here to this point, comes down, it moves again. This is a swing point. So this is where swing trader is looking to enter on the larger time frame. The same thing happens all over the charts. So at this point where you see the market move down, up, curve, and like that, they are all swing points in the markets. So take note of that. It's very important. Now, it's time for you to, get your equation ready. But before you get your equation ready, I want to show you how to deposit with your Naira. How to deposit with your Naira, very important. So that as we end the class, you can do it practically, or do it practically with me right now. How to deposit with your Naira so that you can buy cryptocurrency with your Naira. Okay, now let's go. Let's say, for example, you want to deposit with your Naira. You actually go to bank deposit. But what you have to do is you must register through the link. After the registration, ensure you verify your account. Very important. You go to bank deposit. You click on bank deposit. Once I click on bank deposit, I have to make my app ready. So I can do the transfer here. You see it and it will reflect. As I wait for it to reflect, I'll be taking your questions as well. So what I will do here is I want to deposit Naira. Very important. Now you have to choose fiat. This is crypto. I have to choose fiat. But okay, before I go there, let's say for example you want to deposit Bitcoin. See deposit, fiat, Bitcoin. You can choose any coin from here that you want to deposit. What you will send person that want to send you Bitcoin is this address. You copy this address and send to the person that want to send you Bitcoin, and it will reflect in your BTC wallet. Very important. Now, if you want to receive Bitcoin, you go to withdraw. But here I'm talking about deposit. So let's deposit fiat, which is our Naira. It's very easy and simple. What you do is ensure it's on fiat. Nigerian Naira should be choose. There are other currencies here. Then bank transfer. Then let's say let me deposit as little as 8,000 Naira. Now Binance will charge you 150 Naira for fee, while this will reflect in your account. So for the purpose of this training, I will transfer or deposit 8,000 Naira into Binance right now, so that you see it reflects. So what I will do is I will click on continue. I've done this over and over again. If I show you my chart now, what I will do is I will send this money to this bank. Okay, I will send this money to this bank, this exact amount to this account number. Is very important. So if I do that right now, I have to choose the bank, Ruby's Bank. Just give me a little time. Ruby's Microfinance Bank. Then I take the account number 1359476042. Okay, Binance Holding Limited. Then I'm transferring 8,000 Naira to this account. Once I Now, what you do is once you've done the transfer, you click on I have made this transfer. For me, I have done the transfer right now. So I'll click I have made this transfer. Now you allow it to complete, 5 minutes, and you come and check it. Go and check your wallet. It will reflect automatically. All you need to do, follow the link, do your registration. After the registration, ensure you follow the procedure in the group to do your verification. Ensure you do your verification before you deposit. So once the 5 minutes got elapsed, it will reflect my 8,000 Naira, which they will charge 150 Naira from it, will reflect in my account. And then I'm good to go. I can now convert my BTC to my deposit, which is Naira now, to BTC. As you can see, it has reflected already. So let me give them, good review. Okay, as you can see here, is 7,850 successful. I have successfully deposited my Naira into my account. So what do you do with the Naira? You go back to your trades, go to advanced. As you can see here, if you look at here, if I click on market, if I go to and click on market here, and I click on BTC NGN, if I click on BTC NGN, you will see my Naira will reflect here. Now, if you look at this very point, you see my 7,855 Naira reflect here that I just deposited now. So it's a big opportunity for you that you see someone that wants to buy Bitcoin. You can charge the person higher. Come here and buy Bitcoin for the person and change. Remember, you still have to consider the transaction fee for sending the person Bitcoin into your calculation. If you're charging the person, it's also a business opportunity for most of us that want to actually, do transactions. So that is how you can. So here, if I want to buy Bitcoin here, I can simply put my 8,000 naira. Can put my 8,000 naira. You see the amount. Okay, let me put it on market order. I want to buy instantly. And then I move this 100%. I want to use my entire, my entire money to buy Bitcoin. So I can just click buy. Okay, I can just click buy. Now, if I want to place this order now with a limit order, I can then go here and change this value to 3. And then use the entire money here and click buy. So my order will be executed as a limit order. If you go here, you see my order is not filled yet, but if price comes to this level, it will be executed. You can see it here. When price comes to this level, it will be executed, and I believe price will still go back up. So that's how you buy Bitcoin. So I will cancel this order and my Naira will return. It's as simple as that. So if I want to actually buy Bitcoin, I can use my market order, and then I will put the entire amount, which is equivalent to 0.0000940 Bitcoin, and I click buy. Once I click buy, my order is filled immediately. I have 2 Naira and I have 0.0000941 BTC. That's how you buy Bitcoin. Now, ensure you do a trade. Practice make perfect. Don't just, get the knowledge for nothing. Now, one of the most important things you have to note is I will not just leave you alone here to, struggle in the market, because it's not easy for beginners. I'm here to help you out. So ensure in the group, go back in the group, ask your question when necessary. But I am giving time for Q&A right now so that you can ask your question immediately. So you can unmute yourself and ask question accordingly. And we are going to take quick Q&A for just 15 minutes before we end the class. So unmute yourself and ask your question while I explain.
Hello, good evening, sir.
Yeah, evening. Thank you.
Thank you for the lecture. I want to know, in drawing your trend line, is there any specific point that you can start drawing, or resistance or support? Is there a specific point that you can start drawing from?
Yes.
Or any specific?
Yes, it's a specific point. You are the one to determine a specific point you will draw your trend line from. Okay?
Okay.
You have to determine the point you want to draw your trend line from. But the idea is that it should not cross, like you can draw a trend line from here.
Okay.
Okay?
Yeah.
To this point. You can see it does not cut across any other chart. Now, if you draw it like this, you're actually wrong.
Yeah, I know.
Yeah, so you have to pick out a specific point and draw it from 1 to 2. That's 2 points must be identified. Connect those 2 points together and mark the line.
Okay, if you should come up front here, exactly where you're pointing now, can you draw from that place, the trend line? Can you draw from that place?
This point?
Yes.
I don't understand.
Let's take this last resistance here, support here.
This last support
here. Can you draw from that place?
This last support
No, not
here.
that one. The last one before that one.
This one.
Yes, exactly.
Okay. Yes, you can draw. Yes, you can draw from this point. Yes. You can draw your trend line from here, yeah. You can draw from here. But you can only draw from here when this support is significant. Remember, it's still forming. This support here is still forming. Okay, so when it forms and go up, that's when you can actually connect here like this.
How do we know when support is significant or not?
When it's significant is when it has gone up and leave the level. When it has gone up and leave the level, you know, okay, the support has fully formed. You can't just take somewhere as support when it's still forming. Just like this market was going down, you just take it as support. It must show a bullish move to the upside before you can define it to be a support. But this is a support, and you can place this line here as your trend line.
Oh, okay.
All right. So next question.
Thank you so much.
No problem.
Hello, good evening, sir.
No problem.
Good
Yeah,
evening.
good evening.
Good evening.
Good evening, sir.
Yeah, I'm hearing you.
So what I want to understand here is in trading the Bitcoin,
Okay.
that's in buying, when the on the charts, when the trend is going down, is that when you trigger a buy? And when it's going up, is that when you trigger a sell?
Now, when the chart is going up, it means the price of Bitcoin is increasing.
Okay.
So when the price is going up, like in this case, this very level, this is a good point to buy because it's still low. So when it increases, you can sell here because from difference between here and here is your profit. Now, when it's at a top here, it's not advisable for you to buy here because price has been moving right way up. Where were you when price was moving from here up to this point? So if you are buying here, you're actually buying late. That's why some person that bought Bitcoin here, they're already in loss because price have dropped against them going down. So what you do is, with your analysis, you have to be very proficient in technical analysis. And I have put together courses that can help you for that, which will be released on Friday, Saturday next week. So at this point is a good time to buy Bitcoin. Why? Because price have dropped significantly. So it means it will go up before it will now come back down, if this trend should be a downward trend. I don't understand. Okay, so you buy low when the price is low and sell when it's high. Yeah. Any other question?
Thank you.
Any other question?
Good evening.
Good evening. You're welcome.
So I'm on the application now. So I'm seeing something like set spot or margin. Can you please explain that?
Okay, now spot trading that you can see here. Where is that? Spot trading is just like when you buy something from the market and you allow it to appreciate. That's spot. That you can see here, you see fiat and spot. Let's say you buy Bitcoin, you allow it to appreciate. Now, margin. In margin trading, just like forex trading, if price is going up and you buy, you are in profit. If price is coming down and you sell, you are in profit. So margin goes two ways. Spot is only one way. But in margin, you must be in the direction of the market. That means if you take a sell here, that is, we call it short position in margin trading. If you short BTC from here down here, you should be in massive profit because you sell Bitcoin and buy it back at a lower price. That's what they mean. You sell Bitcoin here and buy it back at a lower price. So the difference is your profit. So that's what we call margin trading. Now, spot, if the Bitcoin price is going down, you are losing the value of your Bitcoin. Hello? Do you get what I'm trying to explain?
I'm following you.
Okay, so spot trading means you buy, allow it to appreciate, you make profit. If it goes down, you lose. Margin trading, if you say it will go up, it went up, you are in profit. If it goes down, you lose. Margin trading, if you say it will go down and it goes down, you are in profit. If it goes up, you lose.
So which one do you advise now?
For beginner trader, stick to your spot trading first. Margin trading can be very difficult and it needs, high level of experience. That's just the truth. You need high level of experience. It can also be very, very profitable. Okay, but you need higher experience. The same thing to futures. It works the same way as, margin trading. I believe I have answered your question. Okay. Next question, please.
Good evening, sir.
Evening. Continue.
Sir, I want to ask a question about, I saw some coins that they will have like times 10, times 5, times 3 in front of them. So I just want to know the meaning of them, sir.
Okay, now all the times you are seeing is what we call leverage in trading. Now, if I switch back to margin trading, you will see some coin that will have 10x, you see 5x and all that. What it means is that you are borrowing some certain amount. That's what it means. You are borrowing certain amount for you to enter that trade. That means you are trading on margin. You are leveraging. You are borrowing money. and the money you are borrowing is times X. So that if market move in your favor, let's say 100% times 3. If you're using 3x, if you're using 100x, it means if market move in your favor 50% times 100, that's how your profit will be as well. But in spot trading, like I explained earlier, it's not like that. You only get if market move 100%. That's if Bitcoin appreciate 100%. You just get 100% flat. But someone that was doing margin trading and it uses 3x, the person will have 3x. That's 3 times 100% of what Bitcoin increased to. That's what it means. Let me come back to advance here. I don't know whether you understand what I just explained now. Hello?
Yes, and
Yes, the X you are seeing here, is margin. So this, you can trade this on margin, and you will have this one now have 10x. That is the maximum leverage you can take is 10x, 10 times your amount. That means if you are dropping, $10 to occupy this position, your broker can give you extra 10. That's times 10 times 10. That's 100. That's what it means. The same thing. Remember, margin trading work against you as well for you. That's if the market is going against you, it can be very detrimental. That's why I said it's for advanced traders. If the market is going in your favor, you'll be very happy. Like, you'll be very, very happy because you will see the money as in dropping down in your account drastically. And it's also sweet. Now, for those of you guys that already know how to trade Forex, you can trade, on margin here as well. So I believe I've answered your question. Another question?
No, good evening, sir.
Good
yes,
evening.
thank you, sir.
Good evening. Yeah.
When you are placing a limit order,
Okay.
or how do you put stop limit or stop loss while you are placing a limit order?
While you are placing the limit order, how will you put your what? Stop limit or what?
Yes.
Your stop loss. Okay. Now, if you want to place a stop loss together with a limit order, you use your stop limit so that you can place a limit and have a stop. You can place a limit. Let's say, for example, you want to buy Bitcoin. You can say at this price is where you want to buy Bitcoin. But at the stop price is where you are saying, if Bitcoin continues down after buying at this price, I'm no longer interested. Sell my Bitcoin back to USDT. That's what you are saying. So at this point, you are buying Bitcoin, and if Bitcoin moves to this price, that's the price you will feel here, it will automatically sell your Bitcoin back to USDT, because at this point is your invalidation point that I talk about. At this point, you are saying Bitcoin will further depreciate, and so therefore, if it depreciates, you will lose more. So therefore, at this point, which is the stop price, I don't want to lose again. Convert my Bitcoin back to USDT for me. And USDT is a stable coin, which means if Bitcoin it should crash, USDT is still the same. Have I answered your question?
Okay, but I want to also ask, can you also, because somebody like me, I don't like watching charts too much.
Okay.
Now, can you place your limit order with, just like I'm a Forex trader, I trade Forex.
Okay.
Your sell order, that's your tip, call it in Forex.
Okay.
Can you place the 3 at the same time we do
No.
in Forex?
In FX we have buy limit, sell limit, buy stop, sell stop. Okay. Now that one is different in crypto, where you set your buy stop, you set your stop loss, and you set your TP. You get it? Hello? I hope you're hearing me. You set your limit order, let's say limit sell, you set your stop loss, and you set a TP. In crypto, it's not like that. It's different. You can't set these 3 things, but the most important thing you can do is using the stop limit, where you can buy, and if price is going still against you from your buying point, you can set it back. Or you just buy at a limit order and allow price to do whatever it wants to do, or you watch it. So it's different from FX, where you have, buy stop, buy limit, sell stop, sell limit, and other, where you set your, various TP and SL.
Okay, sir.
Yeah.
Thank you.
Yeah.
Yeah. Hello.
I can hear you. Go ahead. Go ahead.
Yes. Yeah, I've been following from the beginning.
Okay.
Yes. For example, you're on the spot.
Yeah.
You bought at the very good points. It went in your favor.
Okay.
It rose up. At the end of the day, market started dropping like the current situation.
Okay.
What's the safest thing to do?
The safest thing to do. Thank you for that question. I love you. What was your name?
Come on, my name is Alex.
Alex. Okay. The safest thing to do is that you should use your stop limit, or you use a limit order. Now let's say for example you buy here, market starts going up, market starts going up, market starts going up. What you do in this case, use your stop limit. Remember, if you set buy like a stop limit sell and you set it below, it will just execute without you saying anything, because you are selling at a lower price. Okay. Now another thing you can do is that since price is moving up, you can as well set a limit sell higher, so that if price moves to that point, it will execute. You can as well trade as the price is going up. You can be shifting, your price up using stop limit. Two things I've explained now. You can use stop limit to trade your price. Like as it's moving up, you are shifting your stop limit to, as it's moving up, you shift your stop limit. Or you place a limit sell above where price is. Like in this case, you can place a stop limit to sell here, so that when price moves to this point, it will sell. Or as price start moving up, you be pushing your stop limit close to it, so that if it eventually drop, it will just sell for you and you won't, be in loss. So two things you do there.
Okay, that's fine. Thank you very much. And also, for those that do not want to trade, you don't want to trade it, like now you buy Ethereum rose up to a particular level before it started dropping.
Okay.
Yes. So those that will not have time to be checking all the time, whether to trade or to put stop loss or to put stop limit, buy stop, and the like. What do you also suggest?
Okay, what you can do in that case is you'll be an investor. Investors, you invest in the cryptocurrency space, where you leave the market, you buy a particular coin, you allow it to stay there. Maybe you're looking at you leaving it for 3 months, 6 months, 1 year, 5 years. That's what you do, so that you don't bother about looking at the chart. You can buy your coin and leave it for months without looking at it. So that's what you do if you don't want to be looking at your chart up and down. You be an investor. You put in your money, buy low, buy very low. Look at an underlying asset that is at a very low point. You buy and leave it. After some months, some weeks, just be checking it without looking at your chart, bothering you with a whole lot of analysis and all that.
Yes, another question, please.
Okay.
You talked about how to deposit. You never talked how to withdraw.
Okay, how to withdraw is very simple. You can just go here. For example, if I want to withdraw USDT, I can just go to withdraw. Can just go to withdraw now. If I want to withdraw fiat, I don't have fiat anymore. Can click on fiat. Since it's crypto, I can put some crypto. I have USDT in my balance, so I can use Tether here. Then I have this balance here. What I will do is the person that want to receive, I will take the address and paste it here. Now, one thing you have to do is you have to select the network. You ask the person which network. If it is TRX, remember TRX has 0 fee. If it is Tether, which is the common one, is $8 fee. You see other fees here. So you basically have to define the network for the address. You choose the network, but most times it's always Theta network. Then you put the amount. In this case, I can put maximum, and then I have to put the address that is receiving this amount of Theta, and then this button will be active. I click on submit, and that's all. I've withdrawn my USDT. The same thing happened to Naira. The same process when you want to withdraw any coin at all in or on this platform. It's very simple when you want to withdraw.
So it's possible to withdraw your crypto into Naira and Naira to your bank.
You have to convert it first. Let's say for example you have Bitcoin, convert to Naira and then send it to your bank.
Naira.
Yeah.
So Binance gives opportunity to transfer to the bank.
They will credit your bank account. They have to credit your bank account within few minutes. Your bank account will be credited.
Okay. That's fantastic.
Yeah. Just like I deposited and it reflects. The same way when you withdraw, it will also reflect in your bank account direct. It's what I've been doing. If I don't know whether I can show you my history here, I've done a whole lot of transactions. If you check my transaction history, where is that? If you check my transaction history, you see successful. So I've done a lot of transactions with this very method. I've done a lot of transactions. So that's that. Okay, the next person, please. We have just
hello, sir.
3 more questions.
Hello, good evening.
I'm with you. Go ahead.
Yeah. You talked about trailing your profit using stop loss.
Okay.
So, how can you be able to achieve that? That where you are making a profit and you want that profit, you don't want that profit to go below
that point.
So you put a stop loss like a benchmark. I get it. So as is going up, you keep putting a benchmark.
Okay.
So at the end of the day, anytime the
market reverse,
markets decide to reverse, you will still be in profit no matter what.
Yeah.
So how can you be able to achieve that?
That's what I'm saying. You use your stop limits. Use your stop limits to do that. The limit is where the stop is where it will take you out. So let's say I have what here? I have Bitcoin here, right? So I can set if I want to set this Bitcoin to USDT, I can set a stop limit here. 16. Let me put it on 16,611. Stop at 16,611. Okay, 0.00. Then my limit should be something above this. 16,611, 16,613. Okay, so I can as well. Okay, this should be a sell. Sorry, this should be a sell. I want to sell my Bitcoin. So if it gets to that point, although I'm not in profit yet, but you automatically sell. I want to sell at this point. 16,570. But my stop should be. Sorry, guys. This is stop limit. So my limit should be. Let's say 16. I just want to be practical here. That's why I'm using time to do this. 16,638. Then my limit, my stop is 16,570. 16,570.00. So if I click on sell, it will give you this, you confirm it, and my order is placed. Now what happens is if Bitcoin comes to this point, it will automatically sell. Now in your own case that you want to buy, when you bought Bitcoin, let's say you use this kind of order and it doesn't hit your stop loss and you bought Bitcoin, Bitcoin start going up, what you do is you start adjusting this order. I don't know where you are getting me. You start adjusting, yes, you start as price move up. You start adjusting this price, this limit and stop order. As price goes up, you adjust it gradually. Remember, you must adjust in such a way that if price goes up a little bit, it will not just take you out. Because not all price fluctuation means that the price is going to go right down. Some are just minor retracement, just like what happened in this case. Price just go down a little bit and still move up. So you have to be very strategic as a technical analyst and then place it strategically in line as the market moves to the upside. By so doing, you will be securing your profits as the market moves up. So in case the market reverse, it will reverse, and once it hits your stop, it will automatically send it back to USDT and you'll be safe and you still collect, some profit that you have. That's how you do that.
Okay, so that means the line can be adjusted using even while the market has already executed, you can still move that stop loss line.
Yes, you can move it as you can see here. If you can look at here, it's not executed yet because price have not come to that point. Now, if price come to this point and it hits my limit order, that's the limit price, it will execute my Bitcoin. It will send my Bitcoin out for me. It will set it out. Yes. So what you do in the case of buy, and you use stop limit, the limit price is the price at which you buy. Once price come to that limit, you buy. Now, if price does not hit the stop, it won't sell back to USDT. It means if price move up, your Bitcoin appreciates. You can as well shift your stop. That's your stop limit now. Shift it in line as price move up. That's what you do. Yes, it's very simple. It's very simple. So in this case, I will cancel it because price have not come to that level, and I don't want to sell my Bitcoin.
Okay, I have a second question.
The last question. Okay, you go ahead fast.
I have more questions. I have a question.
During withdrawal, you said you talked about network, the Theta network and those other networks.
Okay.
And I was seeing a fee of $8, $8 point something as a network fee.
Okay.
So is there a way that we can maneuver those fees to be able to withdraw without sell to our Naira?
Okay. Turn your Naira to what? Be fast.
Yeah, to sell our BTC to Naira so that we can be able to withdraw to our bank accounts.
Yes, directly. Now you can, let's say for example, you have Theta. You can convert Theta to Naira, convert Naira to Theta, and sell it to your bank account. It's very simple. It's
without
very simple.
much
Now,
fees.
Yes, you can as well change the network to TRC20. TRC20 has 0 fee. But the person you are sending the USDT to must send you a TRC20 address. If you send another address that is like ERC20, you've lost your coin. It's just like when someone sends you a Ethereum address to send Bitcoin to, you've lost your coin. So if you are choosing a particular address, that person you are sending to must give you that particular address for that network that you choose.
Okay.
Yeah. The last question.
I have question, please.
Okay, be fast.
Yes. You have been mentioning USDT as a stable coin, using it as a pair against the BTC. Are you saying that yes, USDT is a stable coin? Yes. Are you saying that there's no other type of
we have
coin
others,
that we can use?
We have other stable coin like BUSD is a stable coin. TUSD. BUSD is a stable coin. TUSD is a stable coin. USDC is a stable coin.
So whatever USD is a stable coin.
They are all here. See, they are USDT stable coin, BUSD stable coin, TUSD stable coin, USDC is a stable coin, PAX is a stable coin. These are all stable coins. This one I mentioned now is all stable coin.
Okay. Do you also, is BNB a stable coin?
BNB is not a stable coin. It's just a Binance coin for the exchange.
Thank you very much.
Another question, please. The final question for this section.
Is it a good time to buy Ethereum? Can we check the chart?
Is it a good time to buy Ethereum? You want to buy Ethereum now?
Yes.
Do you want to use my analysis?
Yes.
Okay. Okay. Right now is you can buy Ethereum right now. Yeah, you can buy Ethereum because it's actually low here. It's a good time to buy. It's a good time to buy Ethereum. It's a good time. But what you must understand is, from what I'm seeing here, it has formed. If this candle, you should buy Ethereum if this candle close above this bearish candle. Buy Ethereum if this candle is forming close above this bearish candle. You can buy. Otherwise, don't buy. Because if you look at here, this was the close of this very particular support, and this support is lower. That is, it closed lower than this. So this chart on the normal should still go down before it will ride up. But if it goes down, it won't go down that far. But look at this candlestick. If it close above this, these are critical technical analysis. If it close above this, buy Ethereum. If it does not, don't. Let's wait for the next candle to form and close as well.
What time frame is that?
This H4. This H4. This H4. Are you seeing it?
Okay, thank you, sir.
All right. Last question. Anyone? Okay, so thank you very much, guys, for being part of the training. I really appreciate. Now, if you've not registered, check the description. If you are watching on YouTube, you will see my link. Register and get 20% off commission. And then the description also have, a link to the general WhatsApp group where I post free signals. Also, ensure anyone on this particular training, ensure you subscribe to our YouTube channel. This video is recorded and you can watch it over and over again. And ensure you don't just take this knowledge for granted. Ensure you practice and you will do well. Now, by next week, Friday, Saturday, I'll be releasing a complete guide to cryptocurrency, which you can, pay for it and be guided from beginning to the end. Not only that, you'll be given a VIP signal where you will, profit in the market immediately through my own signal with my own analysis. So thank you very much, guys, for participating in tonight's class. Tomorrow, the same time, we are here on Zoom, giving out knowledge for free. So ensure you are here. Ensure you invite your friends. If you have any other question, go to the WhatsApp group and ask your question, and I will answer them accordingly. So thank you very much for being on board. Thank you so much. Thank you.